The market saw renewed life last week, as all 5 major markets added green. Much like the prior week, the 5-day trading session opened to a weak start, with the greatest losses taking place on Monday. But as the sessions continued, the returns improved, with Thursday seeing the greatest gains, which also represented the bulk of the weekly return. Thursday's gain began with the release of the weekly Initial Jobless Claims, which made headlines for reporting the lowest new jobless claims since the pandemic began. The sub-300,000 number gave hope to market participants that the larger-than-expected drop in unemployment marked a significant milestone in the recovery of the economy. But the jobless number was far from the only significant headline. Tuesday's JOLTS report saw a slight reduction in the national job openings, as the number dropped slightly to 10.4 million in August from the revised July reading of 11.1 million. Meanwhile, the Labor Department recorded a record 4.3 million people, or about 2.9% of the entire workforce, quit in August. Wednesday held the much-anticipated Consumer Price Index report. September's monthly CPI reading came in at 0.4%. While the monthly reading was mostly lower than recent months, it was the 12-month number that caught analysts' attention, coming in at 5.4%. This marked the highest reading for the annual report since 1991. Nevertheless, the markets appear to overlook the inflation concerns, as 10 of the 11 sectors closed higher. Moreover, Treasuries seemed unfazed by the inflation number, as the 10-year actually fell 2 basis points week over week. This backdrop will add some extra color to the earnings season, which will begin in earnest this week. The number of earnings will continue next week before it peaks the week of November 1st. Investors will wait to see if there are any frights in store as the days proceed to grow darker, approaching the holiday season.